Hello there. In this video, I want to answer a question I get quite a bit. What's the deal with different qualification amounts? I've had people call me and they might say, well, I talked to a different lender and they actually qualified me for a different amount than what you're telling me. And so in this video, I want to explore the different qualification amounts and why there might be differences and what you need to know about that. So the first thing you need to know, and this is for any type of loan, whether it's VA, FHA, conventional, is we're actually qualifying you on the payment and not the loan amount. And this is very important because property taxes can vary considerably. I'll tell you a quick story about this. So I recently had someone that tried to buy a house in Butler County, Ohio. And for those who don't know Ohio, Butler County is about a 30-minute drive from me south. And they found this beautiful house in Butler County, out in kind of more of a rural area, qualified them for an amount. And then 2 weeks later, they called back and said, well, we don't want to move to Butler County. We want to move to Miamisburg, Ohio, which is a little closer to me in Montgomery County, Ohio. Well, Miamisburg is a much more urban area. And guess what? The property taxes are way more in Miamisburg. And guess what happened? They no longer qualified because the debt ratio got blown out. Because what happens is we are qualifying you on the payment, not the loan amount. So, other thing to consider, and this happens quite a bit, is also HOA and land lease fees. And this actually also happened. Like, so for example, I might qualify you on a house, and you're like, oh, yeah, I definitely want to buy a house, and we get you qualified. And then you start shopping, and you figure out, well, I don't want a house, I actually want a condo. Well, those condo fees are sometimes $400 a month. And oftentimes, that loan amount would get lowered. And so just because I qualified you on the loan amount on one type of property doesn't necessarily mean I qualify you on all types of property. Now, similarly, you have land lease fees. And I don't say this much here in Ohio where I live, but in other states where I'm licensed all over the country. We actually had someone in New Mexico that's happened to where they got qualified on a certain loan amount, I think about 250 on the regular house that didn't have land lease fees. And then they, sure enough, went under contract on a different house that had land lease fees. And for those who don't know, certain properties you have to pay land lease fees, and typically it's California, New Mexico, and some of these western states they have land leases. And I was like, well, we can do it, but you're gonna have to have your mom co-sign because now that we have this land lease, all of a sudden again, the payment's higher, like I just said, and we're qualifying on payment, not loan amount. And so again, those land lease fees make a huge difference. So make sure to count all the costs and talk to your realtor on what are all the costs. Look at those property taxes, especially. And especially if you're looking in multiple jurisdictions, you have to understand, okay, jurisdiction A might have one tax rate, jurisdiction B might have another tax rate. Other things to consider, some of these debt ratio rules are agency rules. So for example, a FHA loan has, your debt to income ratio maximums, and VA does something called residual income, and so you're not going to break residual income, but there are something called lender overlays, and that gets really interesting on the VA side, especially. A lender overlay is a rule over and above what the VA requires. The VA actually does not have a maximum debt ratio, but most lenders do. Now, that debt ratio, or your debt to income ratio, in other words, your debts versus what you make, that varies considerably based on the lender. And so some lenders say you can only go to 50. Some say, well, we'll let you go as high as you want, as long as you meet residual and as long as you meet automated underwriting. And I know another one lets you do a manual underwrite up to 65, which means basically your debts versus your income, 65%. Basically, the debt that you owe is 65% of your income. Now, that's pretty darn high. Typically, it's in those kind of situations, there's a lot of non-qualifying income because some of the true 65% debt ratio is pretty deep in debt, could possibly end up being a lot of financial trouble, a lot of financial distress. So luckily on those type of scenarios, there's a lot of non-qualifying income that's not being considered. And here's another thing to consider is your lender's interpretations of income. And this is where we get into more. One is loan officer's skill set of, okay, you count this and don't count that. And go either way. Sometimes there are unskilled loan officers that will count things that they shouldn't count, only to find out in underwriting that, oh, yeah, by the way, and I've had a few of those where they say, oh, yeah, they qualify for this amount. I look at the file and I'm like, well, this overtime over here should not be counted. And they actually qualify for way less because they have a lot of non-qualifying income. It happens the opposite too, where sometimes loan officers don't dig deep enough and figure out, oh yeah, we can probably get a verification of employment, other things to actually figure out the actual income that we can qualify them with. And a good loan officer will push back on that underwriter too. I do that all the time. That I'll see an underwriter say, oh, this, we don't like the way this income looks. And I'll be like, well, can we get a verification of employment? Or sometimes as a broker, I actually had one recently where I didn't like the way they interpreted my overtime. And we literally yanked the file, took it somewhere else. So that's one of the advantages I have as a broker with 150 companies I work with, that we can take that file anywhere we want and find an underwriter that is a little more forgiving and will actually agree with us. And so as you can tell, not every loan officer is the same. And if you're kind of tired, you have a lot of weird non-qualifying income, it might be a good idea to shop around and make sure you find someone that's skilled enough to actually fairly grade your income and grade that, especially if you have variable income and weird stuff going on, that could actually give you a fair shot, if they're not getting you enough. So as you can see, there's a lot to consider when buying a home. And again, we're qualifying you on the payment, not the loan amount, and things vary considerably by lender. As always, if you have any questions about mortgages, VA loans, or really any kind of loan, feel free to give me a call. My number is 937-572-3713 or skillpro.com. Talk to you soon. Bye.